What is up, everyone? This is February's last week recap of NASDAQ trading, all the trades I took. I took 6 trades this week, and honestly, it was about a break-even week. I closed out with about 100 points in profit. Not too crazy, but the price action had been absolutely wild. I mean, we kind of nuked the entire week, which I'll show in a moment. But a lot of traders got blown out this week. You could see if you go on Twitter or whatever it is, social media, a lot of traders blew accounts. They were just having a struggling week because of the price action. And I was just happy to be in profit, right? So yeah, let's look at this. So Monday, we had this huge nuke down. I saw that on the higher time frame on the daily. I'll show you guys real quick. We had put in this daily inversion here with this candle, and then we had a daily change in state of delivery here. So we got a full close below this candle on the series of up close candles that put in the high. So once we closed below there, I was kind of bearish, and look at that. We got a perfect rejection off the CISD. So if I go back to the low time frame, as you can see, we completely respected that CISD the whole time. It acted as perfect resistance. So coming into New York Open, we just completely sold off. And honestly, this could have been like a pretty good trade. However, this would have been a short for me if we had taken out this liquidity there, but we didn't. We front ran it. I think ES took it and we formed like an SMT here. But nonetheless, I mean, there was no entry here on the entire way down. We just nuked what was this, like 200 points or something? No, nearly 400 points. So there was that. So when a huge move like this happens, you don't expect for price to give you like amazing conditions afterwards, at least for the next hour or two, at least to give you like an opportunity. So I just kind of sat on my hands. We just had this liquidity being built up here. All this liquidity is being generated. This is what you call LRL, low resistance liquidity. The market generates, and then so just kind of chops around. A lot of people get their orders filled, and then they get stopped out when the market does this, right? So a lot of traders, this is where most people lose money. This type of price action. We're just kind of chopping down, and then you just get absolutely swept by a huge V reversal. And you got to realize what's happening, right? Like everything is about context in trading. So for me, it was super obvious that we were just forming liquidity after this huge move down. So no trades for me for the first like few hours of New York session. I didn't get a trade in on Monday until PM, like right before close. So I'll go over that. So we came in and took out all that liquidity. Like I said, we retested previous day low from below, and it formed resistance, right? So once we had the 2 p.m. open, we started to see some rolling over here. We broke market structure. We started closing below here, so we got some change in state of delivery there. And what I like to trade is something called open low high close, or open high low close, which is essentially, if you look at the hourly candle, this is 2 p.m., right? This is a 2 p.m. open high low close, because we had this 2 p.m. open at a higher price. It put in the wick and then completely reversed and closed lower. So it's an open high low close, right? So on the 1 minute or the 5 minute, whatever it is, you want to look for where it's going to turn. Okay, so this was the open with this line here on this candle. We took out these gaps here, took out this liquidity here, and then we started seeing some reversal happening. And for me, my cue to enter was a 2-minute inversion that happened here. So this 2-minute inversion was put in, and I didn't get an entry until way down here. So my entry honestly wasn't that great, but still played out really well. We got I put my break even here, so break even there, and then took profit here at this 15-minute fair value gap, which I can show here. So at this 15-minute gap. And there was another 15-minute gap here, and I don't know if we hit it. So we did end up hitting it, but I was happy with just getting my piece of the pie there. So I wasn't going to, especially with the conditions in the morning, and it was so late in PM session, I wasn't just going to bring it all the way down here. And we didn't even hit that till 3:30. So yeah, I mean, I think that was the right move. But that was Monday. Let's go on to the rest of the week. So yeah, I had a trade down here as well, kind of similar, open, low, high, close, which I'll go over. Okay, so let's go here. So this was a New York lunch, open, low, high, close on Tuesday. And the reason I traded lunch is for the same reason I traded PM the day before, because we got a huge nuke once again, and then just kind of some mid price action. And lunch ended up being the session that wanted to give us an opportunity. So yeah, so we got a huge nuke. Like I said, again, just generated liquidity here. That's what you call LRL. A bunch of traders trying to get in, trying to trade these conditions, and then absolutely get wrecked on the way up. So we went up here. We put in a 1 hour fair value gap, which I'll show. 1 hour fair value gap there, as you can see there, and there's also one here. So the one I was talking about is the one right here that you can't really see because of this huge candle. There was obviously another one here, so I'll mark this one out just so we can see what it did. So 1 hour, and let's go back onto the 5 minute. So this is the one I just marked out. As you can see, we got a perfect reaction off of it. I mean, it's confluenced with yearly open as well, but this is why these fair value gaps on low time frame are so key to watch, right? So, okay, anyways, we got a 12 p.m. open, low, high, close. So on the hourly candle, we opened lower. We formed the wick, right? We formed the wick low, and then we closed higher, right? So it's what you call a power of three. So accumulation, manipulation, and distribution, right? For you guys that know what I'm talking about. Accumulation, distribution, and then expansion, right? Sorry, accumulation, manipulation, and then distribution, not distribution second. But you guys know what I mean. So this is all that is in an hourly candle, and we're trying to catch that move inside the 1 minute and 5 minute just low time frame day trading, right? So this is what we had. We had a 12 p.m. open. We got this complete chop here, and then we came down here and took out this kind of low here, and we got a 1 minute inversion. So we took out this 15-minute gap, which is what I was really looking for, and we did that. And we started seeing reversal. We got this 1 minute inversion. So that was confirmation to me that we have buyers and we're stepping up, So long there, stop below the low in case I'm wrong. 25-point stop loss, 70-point target. Went straight to TP pretty much. So super, super nice. Really nice trade there. And you could have wrote it out, left a runner for the next 1 hour gap, like I had mentioned, and that would have given you another, like double your profit. So there's that. But as you can see, I just wanted to show that hourlies are very well respected. Even 4 hours, you want to look at daily, 4 hour, hourly, 15 minute and 5 minute fair value gaps. Those are super key. You could even look at weekly, but those are super rare, and you're very unlikely to get a good low time frame entry looking at weekly. So there's that. But let's go on to the 15 minute and continue on. So the rest of the week is where I just started, taking some L's, but I'll show you guys what I mean here. So coming into Wednesday, I took 2 L's. And I'll just go over them super quick. Honestly, one of them was just a complete mistake that I shouldn't have taken. But this first one wasn't bad. It was a good setup. It just didn't play out in my favor, right? The probability was not on my side this time, so that's okay. So we had price come into this 5-minute fair value gap, got taken out. We got a huge impulse down super quickly here. Why is this not working? What the? Okay, doesn't matter. All right, so we got this huge move down quickly, and then we put in this 5-minute CISD along with this 5-minute inversion. So that usually is a signal for me to be entering, because it's pretty high probability that it's going to play out and go toward liquidity or whatever gap is below. So I was originally just targeting these lows here, and then this liquidity down here, as you can see, for a runner. But we just completely chopped for the next 30 minutes, because I entered this at like 10:30, and we just completely chopped for the next 30 minutes, and eventually it just stopped me out. So just absolutely bad, like, price action. Nothing you can do there. But I was just wrong. So took the L, moved on. Only 40 points, not too bad. And then this trade, honestly, just shouldn't have taken it because it was like a continuation model, but this was previous day high, or this was previous day high, and then we had another key level up there. But after seeing this chop here, this was something I should have looked at to not take the trade, right? Because yes, we did have this 5-minute inversion. What the? Yes, we did have this 5-minute inversion, but in the context of this, I mean, we're just chopping. We're putting CISDs in that aren't even being respected, etc. So the only reason I did take it is because we tapped this 1 hour fair value gap. So we filled it here, and then we got this 5-minute inversion, which was a setup that I normally love to take. But if you look at this price action here, it just wasn't that great. So maybe like a B rated setup, in my opinion. So that was Wednesday. Took 2 losses there, kind of ate into the profits of the week, but still pretty good. But then came Thursday, and Thursday I honestly just should not have traded, but you live and you learn, right? So let's look at Thursday's trade. As you can see, it's just completely wrong. We completely nuked. Thank God for stop losses, right? So we got this 1-minute inversion here. I think we had tapped into like a 15-minute fair value gap or something like that, and that's why I was looking for longs. And this kind of looked like LRL, right? Slow resistance liquidity. But there wasn't any gaps or anything above that were screaming like that price needed to go higher, right? So that's where I went wrong, because my target wasn't that great. Like, yes, we had this LRL, but what's right above it? Like, kind of nothing, except like up here. But is price really going to move all the way up here? Like, probably not, especially with the conditions we've seen. Like, this has been opening and then nuking. Price opens on New York Open and then nukes. Open, nuke. Like, it's been the same thing the whole week, and expecting something different was my fault, right? So not that this was open, but expecting price to be super bullish was just my mistake. So took that loss off the 1-minute inversion. Honestly, bad trade. So maybe like I'll give it like a D, because this was my target. But yeah, that was Thursday. So Friday, I did end up taking a win, and that's the last trade I'll go over. So it was one and done for Friday. We got, honestly, some pretty good price action on Friday. If you didn't make money on Friday, sorry to hear that, but I did. Let's see. Okay, yeah. So this was right pretty much during New York Open. Price nuked down. We took out London and Asia lows. We formed an SMT with ES. Kinda. formed an SMT with ES, and then it got swept again, I believe. And then we formed this low resistance liquidity up here, and we had this intermediate term highs, right? So my first target was this high here, and that's where I ended up taking TP1, and then the rest of my trade got stopped break even over here, which is fine. I mean, 1-to-1 is really all you need. I've said that multiple times. So we had this 4-minute inversion, which I'll show here. So as you can see, we put in this 4-minute fair value gap. It got inverted. Once that happened, I waited until we got a retest of it, because my entry wouldn't have been great if I just market ordered in, because my stop loss was going to be, you know, pretty wide. So I entered around the midpoint of the inversion, and usually you don't have to do that. Like, as soon as you see the candle invert, you can market enter and then put in your stop loss like below the low or whatever it is. But in this scenario, as you can see, I needed to wait for a better entry, because the stop loss would have been like way down here, and that's almost 100 points of loss. Like, why would you do that? So I put it right over here, right above this order block, because I was making this fair value gap be, this 1-minute fair value gap be my real stop loss, right? Or real protection, I guess you can say. So it ended up working out. Price refilled this 1-minute fair value gap and then reversed, went straight to my take profit, closed half there, and then got stop break even on the rest. So really good. I mean, I got 70 points out of it, so that made up for some of those losses that I took before. And yeah, and overall ended up in profit for the week. I didn't see anything else for the rest of the day. And yeah, we had an 11 a.m. open, high, low, close, but there was no entries. But that was this week. Overall, pretty decent week, to be honest. It's just that price action was pretty bad. Not my best week, break-even week, but could have been a lot worse. Saw a lot of traders suffering this week, so yeah. But anyways, hope you guys enjoyed. Hope you guys learned something. If you guys took a win or loss, let me know. And I'll see you guys in the next one. Peace out.